Potential shift here, guys. Trade like it's 2026, not 1996. Welcome. I hope you can make the shift. All right, so Trump attacked Iran this weekend. That is a big deal. It's going to move markets. It's going to cause a lot of volatility. But what does it mean for markets? All right, where are we going to go? It's complicated, obviously. But it's a lot more complicated than you might think, actually, and in ways that are not intuitive and not obvious. So let's break down what this strike actually means for markets. Beyond the obvious, beyond, what comes naturally and intuitively, let's get into how it really affects the markets.
Holy shit. Hey, Mikey, I think he likes it. How about some more?
Hell yes. Hell yeah.
First things first, right? What's the obvious play? The obvious play is get short the market, get long oil, right? Those are the obvious ones. Doubt anyone would disagree that that's the first instinct, all right? That's the first impulse. Short things, get long oil, all right. But the markets don't do obvious, all right? They don't do obvious. If they did, all of us would be rich, right? The market does game theory, okay? Game theory, because the market is a game. Long term, it's an investment vehicle. Short term, it's an arena, all right? And it is a zero-sum game where competitors are trying to break other players. Much like a poker table, much like in any sort of athletic competition. So let's break this game down so we can get an accurate read on how the other players might react to the Iran news come Monday. All right, so here's the game, guys. We've got three players in the stock market game, right? We've got buy and hold investors, which are basically a non-factor, all right? They park their money in the market and they just leave it there, all right? They're not actively trading. They're not moving stocks except slowly creeping them higher as they invest more money in the market. All right, not a factor. Then we have active retail traders, us, and we have Wall Street, the institution and the algos, all right? Those are the three major players in the market. But we're going to just focus on two right now, all right? Just the active traders and the Wall Street traders, the institution and the algos, because they're the ones that are actively sparring with each other day to day, all right? They're the ones butting heads, trying to win money from one another. Not going to win it off the buy and hold investors, all right? They're just parked there. All right. So how does it work? We've got the active retail traders with their tiny stacks, and we've got the Wall Street traders with their giant millions and billions of investable cash, all right? So what happens when a news event occurs, all right? What we get is, say, a bullish event, and we get the active retail traders betting long, right? It's a bullish event, all right? Let me bet long. The problem is that active and retail traders have tight stops and short horizons, all right? And the Wall Street players know this. And the Wall Street players have no stops, right? And infinite time horizons and a whole lot more cash, all right? In other words, they can corner the market effectively against active and retail traders who are holding short term and have small stacks, all right? They don't have to do much to force them out. All they have to do is push price in the opposite direction, all right? When they start pushing price hard enough in the opposite direction, the active retail trader with his short stack, with his outs, with his short time horizon will eventually give up, all right? His out will get hit, and then his money will move over to the institutions and the algos. Wall Street will have captured his money. Mission accomplished, all right? That is how the game theory of the market works, all right? And that's why you see reactions oftentimes which defy common sense, which aren't obvious, which aren't intuitive, all right? So you get a bullish event and the market moves in a bearish way, so that Wall Street can lift the money off retail traders. That's how it works. So this is what I call a paradoxical reaction, right? When you get bullish news and the market moves lower, or you get bearish news and the market moves higher, all right? Happens quite a bit. There's, when you have news that is kind of expected to be incoming already, and this Iran news was sort of expected. I mean, it was telegraphed. It's not a complete shock. And you have retail traders lining up on one side of a trade, which they probably will be here. They'll probably be shorting it. You get a reaction that does not follow common sense or intuition, all right? So instead of the market moving lower here on this Iran news, there's a very good chance you get a paradoxical reaction where it moves higher off of this Iran news, all right? Now, I don't want to say that that's going to happen for sure. And first and foremost, there's going to be a lot of volatility when the market opens on Monday morning, all right? So there's going to be a lot of ups and downs. You got to keep your size small. In fact, you may not even want to enter the market as it opens, at least not for the first 10 minutes. I mean, if you want to be safe, maybe the first half an hour. Let the volatility play out. Let the market sort of tell you what it wants to do, all right? Look for resistance levels. On Monday morning, I'll have seen where the market is going to open. I'll put a short out. I don't really know where the resistance levels are right now. It depends on where we open pre-market, but look for setups where we break resistance levels to give you a clue of which direction the market is headed, all right? There's three possibilities here. One is that we have the paradoxical move where by the end of the day, we will have moved higher, all right? Two, we just sort of chop around, it's kind of a high volatility chop around day, which would be a disaster because that's the worst. That will whipsaw everyone and hurt everyone. Distinct possibility. Third possibility, which I think is probably the least likely, is that we get genuine panic selling, like a real panic sell off, like, oh man, this is terrible news. We're going to go straight down. I don't want to rule it out completely. I never want to rule anything out in the stock market because anything is possible. But I don't see this Iran news as affecting the bottom line, all right? It doesn't move earnings per share. It doesn't move multiples, at least not right away, not this quarter, not from what we see right now. So the market shouldn't react in a way that is panicked because this is not a shocking, let's reprice everything event, all right? It was telegraphed and it's not going to move the earnings that much. So I think it's much more likely we get the paradoxical reaction, all right, where we see the market move higher because of game theory, all right, because the algos, because Wall Street is going to know that retail is positioning short and all they have to do to get their money is push us higher, all right? That seems like the most likely scenario to play out come Monday morning. But again, there are an array of possibilities. Caution first, wait for setups, and most especially, there's going to be a ton of volatility at the open. I don't know if you want to play that, and no matter what, maybe just wait the first half an hour, see what's going down, and keep your size small because you're going to get whipsawed if you don't. You got to be able to pick a side and stick with it. I mean, that's how Wall Street breaks you, right? You saw the game theory. They break you because your outs and your holding time horizons are shorter, all right? Don't let them do that to you. Keep your size small enough that you can hold through the swings, okay? That way they don't break you. They don't catch you. All right, so that's my take on Monday morning.
Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles, least of all stockbrokers.
It's going to be tough. It's going to be complicated. It's going to be a ton of volatility. But hopefully you're a little better equipped now after watching this video. Potential shift here. And remember, guys, stop trying to pick winners. Start trying to be a winner. Subscribe for more tips on how to be profitable and more stuff Wall Street doesn't want you to know.